All righty. Key question on stocks is whether they can get back to record highs and where to find growth here, and who better to emulate than Warren Buffett. In honor of his weekend's Berkshire Hathaway annual shareholder meeting, today's three-stock lunch will be a Berkshire edition. And here with our trades is Victoria Greene, founding partner and chief investment officer with G Squared Private Wealth. Up first, Victoria, Apple. Berkshire Hathaway's quarterly report showed the value of its Apple stock holdings was down 22%, but Buffett said he wasn't bailing on his biggest holding. He did sell, however, for tax reasons, he says. Shares of Apple down a bit today. Your trade on Apple.
For me, Apple's a buy here. We bounced off that 165 level, similar to what we saw in October. I think you've got room to run up to the 200s because right now a lot of bad news is priced in, and China wasn't as bad as feared. Really interesting how far off that high-frequency data saying cell phone sales there were down almost 20%. It wasn't that bad. They have their event tomorrow, the Let Loose campaign, relaunching a new iPad for almost 2 years since they've had a new iPad. They have the upcoming release of the M4 chip, and they finally figured out that maybe they should care about AI and introduce some more AI features. So for me, I could see a much faster replacement cycle this fall, assuming they come out with new models investors want, which I think is a pretty solid assumption. So for me right here, Apple's a buy.
Okay, what about Paramount Global? This is when Buffett admitted to selling. He said he took a loss on it. Shares of Paramount are up about 3% today. What's your trade on this one, Vic?
I'm with Warren on this one. It's a sell for me. I think you're going to be jerked around with the news. I think you buy the rip and try to get out with whatever you can. I think this is going to be a very, very messy fight because you have your shareholders, you've got leadership, the board of directors has been decimated, and they're trying to figure out what to do with it. But don't forget the regulators. The FCC is not going to be super happy to have a private equity firm or a foreign firm in Sony coming in and owning the #1 broadcast network. You also have other issues with the other media owned by either of the two bids. And so the concern that this administration has not liked larger conglomerates getting larger and reducing competition. I think this is going to be a really messy fight, and I'd sell any rip you can and get out. And if Warren doesn't like it, then I side with him on this one.
All right, let's go to finally, we got CNBC banking reporter Hugh Sun writing recently about Berkshire Hathaway's big mystery stock wager on the financial industry, saying it's an area that Buffett has dialed back on in recent years over concerns of rising loan defaults. A classic Buffett bet would be a large one with a market cap of about $100 billion. Charles Schwab is one name that has been thrown out as a possibility. Shares of Schwab up about 11% this year. Your trade on Schwab, whether it is a Buffett kind of stock or not.
For me, Schwab's a hold. I've liked this stock since last year. I think it got so unfairly punished during the regional banking crisis, and people didn't understand that Schwab is just not a small bank. They're so much more than that. Their merger's almost complete with TD Ameritrade. They've got about 10% more to migrate. They're focused on cutting costs. They're focusing on retiring expensive debt. I think the deposit flight, it is what it is, right? If you were going to move your deposits out or go into money market, you've already moved it. So now we don't necessarily have the deposit risk, and you're seeing all the ways Schwab is so much more successful than a smaller regional bank, especially with their brokerage arm. They're getting more and more fee-based assets coming onto that platform. And yes, everybody's held to maturities look pretty awful again because you've seen interest rates kind of jerk around bond prices. But Schwab is much more than just a small bank, and I see it as a huge opportunity. We've liked it for a while, so for us, this is a hold because it has had a very nice run up over the last 6 months. But I see potential. You could see this stock continue to move forward. A lot of the worst is behind it. Kind of ripped the Band-Aid off last year, and I see clear skies ahead. Anytime you have a completed merger, you can continue to work on synergies, which means cost cutting and headcount reduction, lean into technology to further reduce overhead costs. I see the stock has a lot of upside.
What is your overall view of the market at today's levels? Fairly priced, richly priced, room to get richer?
Yeah. Rich will get richer. Dow 40K. I'm on that bus. I think I'm very bullish here still. Look, earnings have been absolutely great. Yes, we have sticky inflation. I think it's going to be stickier. I don't necessarily see a cut this year. But again, the equity market has priced this in fairly well. And yeah, we got a little bit of a dovish push and a little bit of dovish help last week, both with Powell taking rate hikes off the table, as well as the weak labor report. But for me, right now, as long as the consumer holds up, then you can still see continued earnings, and there's no profit recession, no earnings recession. That's very good for U.S. stocks, and we like it here. We're watching the U.S. dollar. That could be a drag on some multinationals, but for now, it's keep calm and rally on, baby.
Victoria, great to see you. Thank you for the insight and the perspective. Appreciate that.